All right, everyone. Welcome back to Crypto Brain. Over the past few hours, a discussion has been quietly building across the XRP community that has genuinely surprised a number of experienced investors. The reason is simple. Some analysts are now openly asking whether XRP is gradually moving towards a milestone that many people would have considered impossible just a few years ago. What makes this conversation particularly interesting is that it is not being driven by social media hype, celebrity endorsements, or speculative price predictions. Instead, the focus has shifted towards institutions, liquidity infrastructure, stablecoins, and a phase of blockchain adoption that many investors may have overlooked. While most of the market has remained focused on Bitcoin's price movements, another race has been taking place quietly in the background. A race centered on real-world utility. A race focused on cross-border payments. A race built around institutional liquidity and financial infrastructure. And according to a growing number of market participants, that race may now be entering a very important stage. Perhaps the most fascinating aspect of this entire discussion is that many analysts believe retail investors are still watching charts while institutions are watching infrastructure. Retail traders often focus on short-term price action. Institutions focus on systems. They focus on efficiency. They focus on settlement. They focus on compliance. And most importantly, they focus on whether a technology can operate at scale. If that theory is correct, then a very important question begins to emerge. What exactly is being built behind the scenes that has caused conversations around XRP to accelerate so aggressively? Because the deeper you look into the current developments surrounding the XRP ecosystem, the clearer it becomes that some of the most important signals may not be appearing in headlines at all. They may be developing quietly at the infrastructure level. If we are being completely honest, the crypto market has always rewarded attention. Most discussions revolve around price targets, market cycles, and predictions. Investors constantly ask how high Bitcoin can go, how far XRP can move, and which asset could outperform during the next major bull market. However, history repeatedly shows that long-term winners are often identified through infrastructure before they're identified through price action. That is precisely why the latest developments surrounding XRP have attracted so much attention. To understand the significance of these discussions, we first need to understand how institutions view the market. Retail investors typically focus on returns. Institutions focus on systems. Retail investors focus on momentum. Institutions focus on efficiency. And when trillions of dollars are moving across global financial networks, efficiency, compliance, liquidity, and settlement become extremely important. This is where the XRP ledger's permission DEX begins to attract attention. Many investors initially failed to understand why this development matters, yet for institutions, it could represent a meaningful step forward. For years, one of the biggest barriers preventing traditional financial institutions from using open blockchain infrastructure has been compliance. Banks and regulated entities cannot simply interact with every participant in an open network without meeting strict regulatory requirements. The permission DEX changes that conversation. For the first time, regulated entities can potentially access on-chain liquidity while still operating within compliance-focused frameworks. In simple terms, institutions gain access to blockchain efficiency without sacrificing regulatory standards, and that is exactly why many analysts are paying close attention. Now the situation becomes even more interesting when we look at the expanding relationship between Ripple and Bitso. Latin America represents one of the most important regions for cross-border payment activity. The United States-Mexico payment corridor alone processes enormous volumes of value every year. As stablecoin settlement infrastructure begins integrating into these corridors, blockchain technology starts moving beyond theory and into practical application. And that distinction matters. because there is a major difference between speculative activity and real-world utility. Speculative volume can appear overnight and disappear just as quickly. Infrastructure takes years to build. Institutions do not deploy systems for weeks. They deploy systems for years and often decades. This is why developments involving permission DEX infrastructure, RLUSD, regulated liquidity networks, and enterprise settlement systems are receiving increasing attention. Many analysts now believe the market may be slowly shifting from speculation towards utility. Stablecoins continue to expand. Tokenized assets continue to expand. Cross-border settlement demand continues to expand. And every one of those trends raises the same question: which networks will ultimately support this future financial infrastructure? This is where XRP supporters believe the real opportunity exists. Not necessarily in short-term price predictions, but in long-term adoption trajectories. Whether investors agree with that argument or not, one thing is becoming increasingly difficult to ignore. Institutions are evaluating blockchain technology with a level of seriousness that simply did not exist a few years ago. And that trend extends beyond Ripple. Across the United States, Wall Street firms, payment providers, fintech companies, banks, and financial institutions are exploring how digital assets, stablecoins, and tokenized assets could improve existing financial systems. That does not automatically mean adoption will happen tomorrow, but it does suggest that blockchain technology is no longer being viewed solely as a speculative asset class. Increasingly, it is being viewed as infrastructure, and infrastructure tends to become more valuable as usage grows. That is why conversations surrounding XRP continue to gain momentum. As stablecoins grow into a potentially multi-trillion-dollar market, the need for liquidity, settlement, compliance, and interoperability becomes even more important. The institutions that are evaluating these systems understand this, and investors are beginning to notice it as well. The most important takeaway from all of this is simple. The discussion surrounding XRP today feels very different from the discussions we were having during previous market cycles. Today, the focus is not purely on price. The focus is on infrastructure, liquidity, compliance, tokenization, stablecoins, cross-border settlement, institutional adoption, and future financial systems. Whether these developments ultimately lead to a major shift remains to be seen. Only time will reveal the full picture. However, one thing appears increasingly clear. The infrastructure narrative surrounding XRP is becoming stronger, and history has repeatedly shown that when infrastructure begins to develop, markets eventually start paying attention. The question now is whether investors are recognizing that shift early enough. Thank you very much for watching. If you enjoyed the video, make sure you leave a like, subscribe to the channel, and let me know your thoughts in the comments below. Do you believe institutions are quietly preparing for the next phase of blockchain adoption? Or do you think the market is still underestimating the significance of what is being built today? As always, thank you for your support. I'm Crypto Brain, and I'll see you in the next one.